Hey, if you're thinking about getting into the storage unit rental business and need to secure financing from investors or lenders and need to come up with a set of financial projections for that process, then we have a template here that's built specifically for you. My name's Adam Hooksma. I'm the co-founder of ProjectionHub, and we've helped thousands of entrepreneurs create financial projections for their business and for raising capital from investors, lenders, and really just for internal business planning. In this template, specifically, I'm going to walk you through how to create those projections for a storage unit rental business. And we have a link to this template in the description of the video below. But now I'm just going to walk you through and show you how it works. So this first page I want to show you is really the end. We're starting with the end here. We get to see what we'll get to look at once we're done. Our profit and loss at a glance, a number of key ratios, some unit economics on a per unit, per storage unit property, how many units it has, that sort of thing. And then some startup funds, sources and uses of funds, how you're going to spend your startup funding, and a number of graphs and tables as well as a cash flow summary for 5 years, an income statement for 5 years, and a balance sheet for 5 years. You also get all of those, the balance sheet, income statement, cash flow, as well in a monthly format as well. And so you can see that here. So that's really what you're going to get at the end of this process. But to get there, we have a little bit of work to do, and I'm going to show you how to do that. So on this input assumptions tab, we're going to enter in things like how much you're personally planning to invest, or you could add other investors, outside investors. You'll add any fixed assets that you have that are not including the storage unit properties themselves. So this would be things like your truck, for example. And then down here, we're going to add in the rental properties. So let's say I've got an example of 4 properties that we're going to purchase over a period of time. And so let's say we're starting out with a 65 unit property that's a kind of a drive-up storage facility. It could be, just remote access. And you've purchased this. We're saying that you've purchased the property. And you have $500,000 into it between the purchase price and maybe any renovations that you did. You've got a useful life of 30 years, a salvage cost per property, which is really just, we're saying that these properties aren't really going to depreciate. So actually, I'm going to change that to the $500,000 purchase price. Or say let's just say for the sake of the financial projection that they hold their value. And we're saying that you purchased in month 1. And then here we have a mortgage or loan amount. And we're saying for this first one, what I've done is I've taken the purchase price multiplied by 0.7. So we're saying that you've been able to borrow 70% of the cost, but that means you're going to have to put in 30% down. And, you might be able to do better than that. You may be able to do better than that over time. For your first one, I kind of want to assume that you'd have to put in a larger down payment as you're kind of building up your experience here. Then we have an 8% rate, which again may be high but rates are changing, and so just be aware of that rate. You may want to change that based on your specific plans. And then we have a 25-year term or 300-month term. And I've done that, put in assumptions for these other facilities as well. For these, we're saying different purchase prices, and we're saying that you bought in month 11, so the end of year 1, the end of year 2, and the end of year 3. It's kind of the schedule. Now we'll be able to come to this input revenue tab, and this tab pipes in the information that we just put in from the properties, but now we get to say, when are we going to start generating rental income from this? So we're saying we purchased in month 1, but we're not going to start generating income or renting out until month 3. We're saying this has 65 units available for rent, and the average rent per unit is $115 per month. And we're assuming a 10% vacancy rate. So based on those assumptions, we're assuming monthly revenue of $6,750 per month. Then we have the ability to put in variable costs for those expenses or for each property. So this is an outdoor property, so probably not going to have much in the way of utilities. You have insurance cost, maintenance cost, property tax cost, all for each individual property. Then you can put in other costs as well. And you'll do that for each property. And then you have kind of your overhead expenses. So things like accounting, advertising, and you can put these in as a per property level as well. So here I said, yeah, we're going to have $200 worth of accounting per month per property, and advertising $400 per month per property. You can even do a per unit expense as well. So if there was some sort of expense per unit, you can have that as well. And then you can have a fixed dollar amount expense or even a percentage of revenue. So percentage of revenue example might be payment processing fees. It depends on how people are paying you, but if they're paying via credit card and you have a payment processing fee, let's just add that in here. Payment processing. We'll call that general administrative, and then this is going to be a percentage of revenue, and we want to enter in, let's say that's 2%, we want to enter in that as 0.02 is how that will be represented in the model for 2%. And then you can put in a salary if you have a salaried position, whether that might be you initially. So here I put a starting month of month 13, assuming that you'll kind of take care of the first property yourself, and maybe as you grow, you might be able to bring on additional help. And all of that is really going to culminate into this at a glance tab, and you can see based on your specific assumptions what you can expect to generate in income, what your expenses will look like, and ultimately what your profitability will look like. So again, you can ask any questions that you have down in the comments section of the video below, or reach out to us at support@projectionhub.com, and we'd be happy to help. Thanks.